and Berkshire Hathaway are two companies with, of course, revered leadership and two stocks that have been hit quite hard recently. Apple underperforming the broader NASDAQ over the past week, certainly, and Berkshire Hathaway trading just off its 52-week lows. Perfect time to buy then into those two power players. We have two guests. On Apple, Peter Misek, Managing Director and Senior Technical Analyst at Jefferies. And for Berkshire, Greg Womack joins us, President and Principal of Womack Investment Advisors. Greg, it says here that both you and the company own Berkshire stock.
Great, how are you doing?
I imagine you're quite disappointed at the moment.
Well, I mean, if you look at the last few months, we could be a little happier, but historically it's hard to beat Berkshire's returns.
Right. Why do you think it's down as heavily as it is at the moment? I mean, it's trading barely above book value, I understand.
Yes, barely book value, 16% off the March highs of this year, Simon. Really started in March when the so-called incident happened, but more recently is just the earnings. You've seen weakness in insurance, financials, manufacturing, but you've seen strength in areas such as railroad, energy, and utilities. So the business model is not broken. It is going through the weakness of the economy at this point. But when you look at buying a stock or security, you look at two things: the fundamentals and technicals. And the fundamentals are still intact with Berkshire. They're much more attractive than they've been even June of last year. But you look at the technicals; it's trading below the 200-day moving average. And last week, it reversed sharply in higher volume, which could indicate it's putting in a bottom. Now, whether it's the bottom, who knows or not, but it is much cheaper. And so, you'd like to buy a good value stock, what we consider value right now, at a 16% off this year's highs.
So are you tempted to add to your position or to cut your position? It sounds from what you're saying as if without question you would add here.
Yeah, if you're a long-term investor and you can keep your money for long-term invested, adding to shares when they're down significantly that still has a good business model makes sense.
Okay, Greg, thank you very much.